A YouTube channel just published a few videos claiming Canada executed a secret trillion-dollar financial war against the United States. The numbers are staggering. They're also made up. This evening, we're calling Shenanigans, and I've brought receipts. Good evening, I'm Steve, and this is the Daily Reef Canadian Macro. The channel Crockett Prime has been making rounds on financial Twitter and YouTube with a 3-part series on Canada's response to Trump's tariff threats. The videos are compelling, well-produced, and packed with specific numbers that sound like serious research. The problem is that when you check those numbers against Statistics Canada, the Bank of Canada, the U.S. Trade Representative, and the Fertilizer Institute of America, the whole thing smells a little off. Today we're going to go claim by claim, and we'll show you what Crockett Prime said, what the actual data says, and what the real story is, because there is a real story here, and it's interesting enough that nobody needed to invent anything. In Exhibit number 1, Crockett Prime's first claim is about Canadian pension funds. He says, and I'm quoting directly, that 6 major Canadian pension funds manage $2.1 trillion in assets, which exceeds the sovereign wealth funds of Saudi Arabia and Norway combined. Then he says Mark Carney said 7 words that wiped $47 billion off of U.S. market cap, and the Canadian pension funds put $18.7 billion in pending U.S. transactions on hold within the last 14 days. Let's take these apart one at a time. On the pension fund side, the real number is actually bigger than what he quoted, which makes the fabricated comparison even more embarrassing. Canada's Maple 8, that's the 8 largest pension funds, manage over 2.5 trillion Canadian in assets. CPPIB alone held $781 billion at the end of 2025, so Crockett Prime lowballed the actual number, presumably because he needed a smaller figure to make his next claim work. The next claim is that Canadian pensions exceed Norway and Saudi Arabia combined. Norway's government pension fund Global, the oil fund, held $2.23 trillion US in value at the end of 2025. Saudi Arabia's PIF held $1.15 trillion US in assets. Combined, that's over $3.3 trillion US dollars in assets under management. The Maple 8's $2.5 trillion Canadian is roughly $1.8 trillion in US dollar terms. Canada's pension system doesn't exceed them combined. It's less than Norway alone in US dollar terms. This comparison is not a rounding error. It's the wrong direction by almost $2 trillion. On the $47 billion in market cap losses, Blackstone, Apollo, and KKR did fall sharply. That is true, but here's what actually caused it. Tariff raised inflation expectations, which caused the prospect of higher for longer interest rates, which is catastrophic for leveraged buyout economics, which is the entire business model of private equity. The drops had nothing to do with a supposed Carney quote. This is a classic post hoc fallacy dressed in a suit. On the $18.7 billion in transactions put on hold, there is no filing, no press release, no CPPIB board disclosure, no Bloomberg terminal entry, no StatsCan record of this. These funds have fiduciary obligations, a legal duty to their beneficiaries, and disclosure requirements to regulators. An $18.7 billion halt would be a material event requiring public disclosure. It was never disclosed, because it never happened. In response to this first segment, I'm going to have to go ahead and give this one a 5 out of 5 on the horse manure meter. Wrong direction on the Norway comparison by $2 trillion, a market move attributed to 7 words when the actual cause was global rate economics, and a specific $18.7 billion figure that doesn't appear in any regulatory filing anywhere on Earth. That's not sloppy research, that's just creative writing. Exhibit number 2, this is where the numbers get truly creative. Crockett Prime claims a $12 billion supply chain collapse within 96 hours of Trump's comments. Aggregate disruption costs of $122.3 billion across the same 4-day window, and that 87% of American agricultural fertilizer comes from Canadian potash. Let's start with the fertilizer claim because this one is the most instructive. The real number is that Canada supplies roughly 85 to 90% of U.S. potash imports. Potash is potassium, one of 3 crop nutrients alongside nitrogen and phosphate. The United States produces the vast majority of its own nitrogen domestically, so what Crockett Prime did was take a real and genuinely significant statistic, Canada's near total dominance of U.S. potash imports, and silently swap the word potash for the phrase agricultural fertilizer. That's not an accident. That's a rhetorical choice designed to make the dependency sound 3 times larger than it is. The real potash dependency story is alarming enough on its own. Canada supplies close to 90% of what the U.S. imports of an irreplaceable crop nutrient with no short-term domestic substitute. That story didn't need inflation. Now the $122.3 billion disruption claim. Total U.S. goods trade with Canada for all of 2025 was $719 billion, according to the U.S. Trade Representative. $122 billion in 4 days would be 17% of the entire annual bilateral trade relationship evaporating in a long weekend. That would be the largest peacetime trade shock in North American history. It would have been the lead story on every business desk on the planet for weeks. There is no Statistics Canada data, no Bank of Canada emergency statement, no Federal Reserve flag, no IMF note, no credible financial press coverage of anything even resembling this. The number was invented and a precise decimal point was added to make it look measured. The Warren Buffett citations throughout the segment are also fabricated. The specific phrases Crockett Prime attributes to Buffett about structural margin being provided by the least visible party in a commercial relationship do not appear in any single Buffett shareholder letter, interview, CNBC appearance, or public statement that we could find. This is the creator writing in a Buffett-esque style and laundering it through Buffett's name for credibility. Find the citation. It doesn't exist. So on exhibit number 2, I'm going to have to award another 5 out of 5 on the horse manure meter. And honestly, this one might deserve an extra credit if we had a 6. Swapping potash for all agricultural fertilizer is technically defensible if you squint. Potash is a fertilizer input, but attributing $122.3 billion in disruption costs to a 4-day window with zero corroborating data and then putting words in Warren Buffett's mouth, that's a level of confidence I genuinely respect, in the same way I respect someone who shows up to a knife fight with a spoon. Next up is exhibit number 3, in which the video claims Canada secretly introduced a 37-month strategic trade diversification, reducing the U.S. share of Canadian exports from 76% all the way down to 51%, the lowest since the 1988 Free Trade Agreement. He then claims bilateral trade flows dropped from $891 billion to $463 billion, calling it the largest single-year trade destruction between two G7 nations in the post-war era. Here's what Statistics Canada and Global Affairs Canada actually reported. The U.S. share of Canadian goods exports fell from 75.9% in 2024 to 71.7% in 2025, the lowest since the early 1980s. That is a genuinely significant structural shift and absolutely worth covering, but 71.7% is now 51%. Crockett Prime needed to show a dramatic collapse, so he appears to have simply chosen a number that felt dramatic. On a bilateral trade figure, U.S. goods trade with Canada totaled $719.5 billion in 2025, according to the U.S. Trade Representative, down from roughly $746 billion in 2024. That's a real decline of about 3 to 4%, meaningful and directly tied to tariff disruption. However, it is not a collapse from $891 billion to $463 billion. That claimed drop of $428 billion in a single year would represent the largest peacetime bilateral trade destruction in recorded history between developed economies. Canada's GDP would have cratered. Unemployment would have spiked. The Bank of Canada would have held emergency rate meetings. None of that happened because the number is fiction. The secret 37-month government strategy is also narrative invention. The diversification that did happen is a combination of tariff-driven demand destruction on the U.S. side and Canadian exporters pragmatically finding new markets, particularly a 17.2% surge in non-U.S. exports to an all-time high in 2025. That's a real and important story. There was no covert federal program. There was no announcement of operational independence. There was Canadian business adapting to a changed environment, which is considerably less cinematic but considerably more true. Once again, for exhibit number 3, I'm gonna have to give yet another 5 out of 5 on the horse manure meter. No hesitation. Claiming the U.S. share of Canadian exports dropped to 51% when the real number is 71.7% is a 20-point fabrication on a single statistic. And the $891 billion to $463 billion bilateral trade collapse, that $428 billion swing would be the economic equivalent of Canada disappearing from the map. Statistics Canada publishes monthly. We would have noticed. Zooming out, here's what's actually happening and why it matters more than anything Crockett Prime published. Canada's Maple 8 pension funds really do manage $2.5 trillion Canadian in assets, with the majority of it parked in the United States. CPPIB alone has 47% of its portfolio in U.S. assets. That is genuine latent leverage, but here's the important nuance that Crockett Prime completely skips. These fund managers have a fiduciary duty to their beneficiaries. They are legally obligated to seek the best risk-adjusted returns, full stop. Ottawa can apply political pressure to redirect capital domestically, and they have been doing exactly that. But a pension fund manager who moves capital into underperforming Canadian assets simply because the Prime Minister asked them to isn't being patriotic. They're potentially breaching their legal obligations to Canadian retirees. That tension is the real story, and it's a much harder one than Crockett Prime's version. Canada's potash dominance is real and structurally significant. Canada supplies close to 90% of U.S. potash imports, and the U.S. produces less than 1% of its own potash domestically. Developing alternative supply would take 10 to 15 years and billions in capital. This is an underappreciated dependency that the tariff fight brought into sharp relief. The trade diversification is real. The U.S. share of Canadian exports fell to 71.7% in 2025, the lowest since the early 1980s, while non-U.S. exports hit an all-time high. That structural shift, driven partly by necessity and partly by opportunity, has long-term implications for how integrated the North American economy actually is. And the private equity sector declines are real. The macro mechanism, tariff-driven inflation expectations keeping rates higher for longer, compressing leverage buyout economics, is exactly the kind of second-order tariff consequence that Canadian investors should understand. Every one of those stories is genuinely interesting. Every one of them was available in public data. None of them required a single fabricated number. That's today's brief, and that means it's time to award Crockett Prime the inaugural Triple Crown of Poo. 5 out of 5 on all 3 segments. A clean sweep. A perfect score in the wrong direction. This won't be the last time we do this. There's no shortage of financially flavored narrative on YouTube built on a foundation of invented numbers, and we'll be back to call it out when we find it. The next time a video hands you $122.3 billion in disruption costs and a Warren Buffett quote you've never heard before, do what we did today. Pull the primary source. It takes 10 minutes, and it'll save you from making decisions based on someone else's fiction. In the interest of transparency, the Crockett Prime videos are linked in the description below, not as a recommendation, but because you should always be able to see the original claim for yourself. I'm Steve. As always, nothing here is financial advice. Everyone's situation is different, so please do your own research and talk to a qualified advisor before making any investment decisions. Good night.